How the Savers Tax Credit works. If you're a lower to moderate income taxpayer and contribute to a retirement plan, you can take advantage of a little-known credit called the Savers Tax Credit. Formerly called the Retirement Savings Contributions Credit, the credit encourages taxpayers to put money into retirement accounts, like a 401k, by giving them a tax break on that money. Unfortunately, not many Americans know about the Savers Tax Credit. In fact, a 2010 Harris survey reported that only 12% of qualified taxpayers were even aware of it. The IRS calculates the Savers Tax Credit based on filing status, joint or single, adjusted gross income, and the amount contributed to retirement accounts. On the next few pages, we'll explain what the Savers Tax Credit might mean for you, and if you're eligible to file for it. The Savers Tax Credit explained. If you're contributing to a retirement savings plan, congratulations, you're already ahead of the game. If you're eligible, the Savers Tax Credit rewards you for your foresight. If you're a low or moderate wage earner, this program was created to encourage your long-term savings plans. Generally, the lower your income, the higher your credit. The Savers Tax Credit can reduce your income tax by up to $1,000 if you file singly and/or $2,000 if you file jointly. Of course, not everyone gets the same credit. It's determined by several different factors, like how much money you contributed to your retirement plan and the percentage of your contributions that qualify. It's also important to remember that this is a tax credit, not a refund, so it will reduce your tax bill, but the savings won't come back to you in the form of money. You can get a 10%, 20%, or 50% credit on the first $2,000 per year that you contribute to your retirement plan. The credit that you receive is calculated as a percentage and mostly depends on your adjusted gross income, AGI. Your AGI is your gross income after subtracting any allowable deductions. Here is the Savers Tax Credit information for 2014, source, IRS. For a 50% credit. Married and filing jointly, AGI no more than $36,000. Filing as head of household, AGI no more than $27,000. All other filers, AGI no more than $18,000 for a 20% credit. Married and filing jointly, AGI between $36,001 to $39,000. Filing as head of household, AGI between $27,001 to $29,250. All other filers, AGI between $18,001 to $19,500 for a 10% credit. Married and filing jointly, AGI between $39,001 to $60,000. Filing as head of household, AGI between $29,251 to $45,000. All other filers, AGI between $19,501 to $30,000. You receive no credit if married and filing jointly, AGI more than $60,000. Filing as head of household, AGI more than $45,000. All other filers, AGI more than $30,000. So do you qualify? Find out if you can make the Savers Tax Credit work for you. Do I qualify for the Savers Tax Credit? The Savers Tax Credit is a great way to cut down on your tax bill, but you need to ensure you qualify first. You can claim the credit on contributions to retirement accounts like 401ks, 403(b)(s), 457 plans, Roth IRAs, traditional IRAs, simple IRAs, and SEP IRAs. Check with your tax professional to see if others apply. Keep in mind, however, that you can't claim any contributions your employer might make to these accounts. To claim the credit, you must be age 18 or older. You cannot be a full-time student, and you cannot be listed as anyone's dependent. You must have made your retirement contribution in the year you are filing. You must meet the income requirements as described on the previous page. These change, so be sure to check each year. If you have made any money from retirement plan or annuity distributions during the current year as well as the past 2 tax years, you must deduct that money from your retirement contributions. Rollover contributions aren't eligible, either, and you can't use any foreign income when calculating your adjusted gross income, AGI. Another positive aspect of the Savers Tax Credit is that you can use it in addition to the tax deduction you already get for contributing to your 401k or IRA. Make sure you take advantage of this double savings if you qualify. This is the most important part. If you do qualify, you need to file your taxes using IRS Forms 1040, 1040A, or 1040N. The 1040EZ form doesn't allow you to file for this credit. The Savers Tax Credit form is IRS Form 8880. Fill it out and attach it to your Form 1040. If you use tax filing software, look for the credit while preparing your taxes. For most people, the Savers Tax Credit saves them a few $100s, and every little bit helps. Source: Brandon.